Joining us now in a CNBC exclusive is Apollo Global's management's president, Jim Zelter. Jim, good to have you. Good to see you again. Of course, we said it was only 7 weeks ago at Milken.
That's
but
right.
Between now and then, the announcements just keep coming, including this one of a couple of weeks ago from you guys. It didn't get that much attention, maybe, because we're getting accustomed to these enormous numbers. What is this deal, though, this $35 billion? What is it going to allow for, and why is Apollo leading it?
Well, thanks for being here. And it does seem like the last 6 weeks has been a whirlwind speed. I think this shows you, in the past, a lot of conversations were about if a company had a financing to do, it was debt or equity or going to the banks. And I would say the or is now replaced with and. So what we really did is, with Broadcom and Google, have created this TPU chip. And Anthropic wants to receive them over a number of years, delivery over the next 2.5 years. So we stepped in the middle and really led the financing of that $35 billion. And like most financings today, it was in multiple tranches. So we structured it with the banks. The banks are senior, take a piece up front, and then we take a piece over the next 4 or 5 years. And then there's a residual risk with Anthropic. So it really allows the financing and funding of those purchases, just like Ford Finance or GM Finance does with cars.
Right, at a very large number. I mean, you know, it's funny, reporting this morning on Chevron and Microsoft, a huge deal down in West Texas that is going to be replicated, is my understanding. My question here is this going to be replicated? Is there a lot more behind this deal?
I believe there is. I think if you go out to the Valley and you talk to these companies, the compute capacity, the ability to get compute because of the rapid growth in the front end from demand, consumers as well as enterprise. And so, you know, when you think about the vast amount of CapEx that's going on with the hyperscalers, $700 billion, there's the requisite financing of all the chips that goes into those data centers. And so these companies, some of them are yet to go public, companies like Anthropic and OpenAI, and they don't have a debt following yet. So certainly the ability to get in the middle and help be a financing partner, I suspect this is early days. I suspect you'll see transactions as large as this replicated. And I think you'll see it not only in this industry, but in other industries, as we've talked about out at Milken. AI and hyperscalers have really taken the headlines to date, but yeah, it's gonna be an infrastructure. It's gonna be an energy.
Are we gonna run out? I know this sounds, I'm kind of kidding, but are we gonna run out of money? I mean, you know, we're talking about $800 billion from the hyperscalers alone. Let's call it 90 trillion needed globally for the next generation infrastructure, 30 to 50 for the trillion for energy transition. Yeah. Obviously, this is over a long period of time. But these numbers, Jim, for two guys who've been around a while, are just staggering. You know, is there enough capital, and where is it all going to come from?
Well, I think that's a great question. I think if you are a CFO or a treasurer of one of these companies, as I said, in the old days, the world you and I grew up in, it was either the high-yield market or the loan market or the bank market. It was much more palatable size. Now the CFO has really positioned themselves, how do I use all of these precincts, the banks, as well as private capital, as well as public equity? How do I do it all in coordination? And I think you are right. I think there is going to be a contest or a competition for access to the marketplace. Certainly, you and I have seen companies in the past, the ability to have access to financing is a competitive advantage. And I think you're seeing it right here. And I think that's what's so unique about the market structure that's evolved in the last 5 to 10 years. You know, in the old days, it was really what is the scale of the public markets and what's the depth? And now we're talking about public capital, private capital, and bank capital all together. And I think that's what's changed right now. And I think that's what's changed the financing markets for firms like Apollo in terms of having these integrated toolboxes. And because what makes our business different, as you and I have talked about, is we have the long-dated liabilities of insurance balance sheets.
Right.
And I think that's the...
Well, you've got this money coming in every month for a fee, right? I mean,
yes,
you can put it to work in an area that perhaps 5 years ago you hadn't anticipated.
Well, I think that's what's unique. What's unique about the last 3 to 5 years from the last 20 to 25 years is the recent focus on investment-grade companies, companies of scale and scope that in the last 20, 25 years, there was a lot of non-investment grade companies, disruptors. These are disruptors that are rated at the highest levels of investment grade. And so how do you, when you have a retirement crisis where people are looking for long duration assets, how do you match those two? And that's where our business model really comes into play.